So you probably found this video because you were wondering if you should get a 30-year mortgage or a 15-year mortgage. Well, it really depends on the scenario. Let me explain. So in the first example, let's look at the typical American, the person that works a 9-to-5 job, invests in their 401k, and retires in 30 years. So if you took out a $200,000 mortgage, that's going to be about $955 a month for a 30-year loan at a 4% rate. And at the end of that loan, you're going to end up paying about $343,000, which is $143,000 over the initial $200,000. Or you can do a $200,000 mortgage and pay $1,410 a month for 15 years at a 3.3% rate for a total of only $253,000, which is only $53,000 over the initial borrow. If you enjoy content like this video, make sure you subscribe and smash the like button. In that example, that was using the current rates today. So the difference between the monthly payments is $455. And if you take the interest paid over the whole term of the loan from the 30-year versus the 15-year, that's $90,000. If you have your mortgage paid off in 15 years, that next 15 years you're going to be mortgage free. So no matter what the economy does, no matter what your employer does, you're going to have your mortgage paid off, so you're going to be that much farther ahead. And not to mention, that gives you the ability to retire early. And here's another big plus to getting a 15-year mortgage if you're a typical American. If you get a 15-year mortgage, your debt-to-income ratio when you go to get a loan won't be as good as if you did a 30-year mortgage because of the monthly payment. But that's going to influence you to buy a bigger and better house. So if your debt-to-income ratio allows you to have a monthly payment of $1,500, and you go to buy a house that's $300,000, you can afford it then if you get a 30-year mortgage. So this is one reason why I'd say stay away from a 30-year mortgage and just focus on a 15-year because it's going to save you money in the long run. If you're a typical American going to work a 9-to-5 job most of your life and invest in a 401k to retire, you're better off to go with a 15-year mortgage because of the safety net it provides. The second scenario is if you want to be a real estate investor. So this is what I am, and this is how I got started in real estate. Is I had equity in my home and it allowed me to borrow against my house to buy real estate. So it's going to be really hard to do if you don't have any equity in your house because most banks won't let you borrow money that's not secured by something. So you need to build up your assets. With a 15-year mortgage, it allows you to do it quicker because you're paying mostly principal after 7 years. If you're going to get into real estate, a 15-year mortgage is the way to go. Here's the kicker a lot of people don't understand. When you take out a 30-year mortgage or a 15-year mortgage, the first half of the life of the terms is going to be paying down the interest. So most of your payments are going to only be going towards the interest the first half of the loan. So if you've been paying on a 30-year mortgage for 15 years, you really haven't hit that much of the principal after 15 years. So that's why a 15-year mortgage is much better in that respect too when you're trying to build equity, is that after the first 7 years, you're starting to knock down that principal pretty quick. So you can get more equity out of your house that way. I can borrow against my house, let's say $100,000 to build a house. So you take that $100,000, build a house with it, sell the house for let's say $180,000. So that's an 80% return in just 1 year. Even though you had to do a little sweat equity, it really pays off. But even if you didn't do the work on your own and you hired people to do it, then you still would probably make a 50% return or so. So that's something to keep in mind when you're debating about a 30-year versus a 15-year mortgage, because it all depends on how you're willing to invest. This is the third scenario, and it's going to be if you want to invest in a duplex. This is the only scenario I think it makes financial sense to get a 30-year mortgage. And the reason why that is your payment is going to be lower, so you can definitely find a renter to pay that payment and help build equity in your house at the same time. So there's really no reason to get in a rush and pay the mortgage down fast because someone else is paying it. Yes, it would be better if you had a 15-year mortgage and you had enough rental income to pay that, but most of the time you're going to have to get a 30-year mortgage to keep that monthly payment low. Here's the scenario. So let's say you found a duplex for $200,000. So your monthly payment's going to be $955. You rent out one side of it for $1,000 a month. So you're more or less living there for free. That's why a 30-year mortgage in this case makes sense. When you get a rental this way, it's much safer than getting a 30-year mortgage on a rental that you're not going to be living in. And that's because if all else fails and it's vacant, you live there and you're just paying a standard mortgage in this case. So it's a little safer bet than just buying a straight up rental property on a 30-year mortgage. So if you invest in a rental property this way, you can also use it as a tax write-off, which is a huge advantage. I'm not a tax advisor, but that's what I've been told. Another way I can see getting a 30-year mortgage, if you just straight up got a great deal on a piece of property and you're wanting to rent it out. Let's say you found a place for $100,000. Your payment's only going to be about $450 or so. And you can rent it out for $600-700, then that makes sense to me. I can see doing that because you found somebody to pay your mortgage for you. So in 30 years, you can sell it or keep renting it out and you got cash flow out the yin-yang. So that's another reason why I can see getting a 30-year mortgage. Okay, so a quick recap. If you're a typical American, working 9 to 5, you just got a 401k, 403b, whatever you got, that's when I can see getting a 15-year. And let's say you're wanting to get into real estate investing, like buying real estate and putting houses on them and then selling them, then a 15-year mortgage is the way to go there because you can build equity. And then the only reason why I can see you getting a 30-year mortgage is if you're going to buy a duplex, live in one side and rent out the other, or if you already have your primary residence and you can afford a 30-year mortgage and get a regular rental, then that's the way to go too. So I hope that helps your decision and if you should get a 15 or a 30-year mortgage. So my thoughts are, I don't want to do anything extra in my life to help the bank get rich. I want to pay as little interest as possible and keep my credit good and leverage the bank if I need the money to help build my wealth. I'm not going to live my life financing the financial system. That's just not my cup of tea. They're great to leverage with, but other than that, I really don't want to pay extra for a mortgage or for interest on a loan. I'm going to end this like I end every video. It isn't the actual money we're after, it's the freedom it provides and how it can provide for our families. All right, and I'll see you in the next video.